It's July 13th. The market is on a tear because of softer inflation data. And we're going to circle back to a few names that we talked about 2 days ago to see what happened. So let's head over to the Longbow dashboard. So here I'm showing you the SHI, so that's a short-term treasury ETF. You can see that it's pretty close to being overbought. The same thing with emerging market bonds. That one is overbought, and then gold, really close to being overbought. So what did we learn? What's going on? What we can see here is that when inflation is softer, people are saying, okay, what's going to happen is that the Fed is not going to hike interest rates as much as maybe they thought a week ago. So when rates come down, bonds go up, and you can see the short one, so the SHI versus the TLT. Maybe I'll plug that one in there. The difference between those two. Here we go. You can see the TLT here is nearing overbought, but the SHI versus the TLT, the short end really moves because that is really what the Fed is controlling. That's hitting the ETF. So you're getting that kind of near overbought signal. So the odds now are not in your favor. This is not the time to be buying into that security. Instead, you should be trimming or thinking otherwise. And then you have here the EMB. Remember, that's emerging market bond ETF. Again, overbought. Same kind of reason. People are saying, okay, inflation's getting a little bit more under control. Maybe we won't see as many rate hikes. Also, it's because of the impact on the dollar. So we'll throw the UUP in there. We'll show you how to do that. You've got the UUP, that's the dollar ETF. And so that's nearly oversold. So remember what happens is when the dollar is down, emerging markets can do well. A dollar up, emerging markets don't do as well. So it's pretty natural that you're going to see this pattern right here. And the same thing with gold. That's nearly overbought. Same kind of pattern, dollar down, gold up. And then if it were dollar up, gold down. So you're heading there. Again, not the time to be heading into gold, not the time to be heading in emerging market bonds. We talked about it a few days ago in places that you might want to be, but this is not the day to do it. This is the day to take money off the table when you see things like that, especially since, remember, these are, we wanted to be seeing these moving into bullish if we're going to be buying in. We were talking about when it's neutral, you can trade around a little bit, but you're not going to have your full position on. And then these here are more in a bearish tilt, especially the long-term treasuries. And so we're going to wait to be putting on that kind of trade. We really think this is short-term, and we'd be cautious because we might see a few more prints of inflation slowing, but by the end of the summer, you might see that it's a lot stickier than people are expecting. So some of those bets on rates going down are not going to come to fruition. In fact, they might creep back up saying, okay, maybe we're not going to be done with this one July rate hike. We might see a little bit more by the end of the year, similar to what Powell was telling folks, like, basically plan for 2 hikes, and that might be more priced in. So you want to be playing this tactically in the short run. And then eventually, as we talked about, you're going to be going short the dollar, long the long bond, things like that. So, and obviously long emerging markets, but we haven't quite said that that's the time to go max position yet, but we'll keep you updated, just like we told you a couple days ago, and we'll follow back on the things that we talk about. So it'll help you learn through the process with the Longbow dashboard. That's it for today, and we'll catch you back tomorrow.